Natural gas futures are trending higher on Monday, approaching the critical $2.80 threshold, a key indicator for long-term trends. As I mentioned in last week's forecast, nat gas may need an additional stimulus to break through the $2.60 resistance, and here we go. Iranian President Ebrahim Raisi and Foreign Minister Hossein Amirabdollahian died in a helicopter crash yesterday. Of course, it could be a short-term event in terms of commodity prices, since Iran is an ancient and very smart civilization. Nevertheless, some Iranian analysts are saying that the Iranian people are ready for revenge if any signs of Israeli involvement are discovered. In the case that war is declared, this will totally change the natural gas market landscape, possibly escalating gas prices to the levels seen in 2022. Meanwhile, at the end of April, I consistently repeated in my forecasts that gas prices couldn't stay below the $2 threshold for long. I predicted it would take approximately a few more weeks for gas prices to surpass the $2 mark, assuming no additional bullish or bearish events occurred. I suggested it could be a trade of a lifetime for those who invested in natural gas at that time. Now, those traders who bought oil stocks around $13 have almost doubled their profits. Okay, let's go back to the current market situation. European natural gas futures continue to rise amid supply concerns due to upcoming Norwegian maintenance outages and an ongoing outage at the Gorgon LNG facility in Australia. Chevron was forced to reschedule the delivery of some LNG cargoes to Asia due to the outage at its Gorgon export facility in Australia. Australia's energy producers endorsed a government strategy to boost natural gas development but warned the country still faces new gas supply shortfalls this decade, while markets remain volatile due to global conflicts. Meanwhile, it will be quite hot over Texas for the next 2 days, then a weather system will cool off this important region by several degrees from Wednesday to Friday before heating back up next weekend into the following week. However, much of the weather data isn't quite as impressively hot over Texas and the South for the 10 to 15-day forecast period. As such, national total degree days will drop below normal for the 10 to 15-day forecast period after being near normal for the first 10 days. Given the current market conditions, geopolitical risks, lower production, and robust LNG exports, gas prices are likely to maintain their upward trend in the short term. The daily chart clearly shows that traders are driving the market toward the $2.80 target. A test of this level will mark a decision time for traders. We could see profit taking on the first test of this indicator or a breakout to the upside. However, traders need to be aware of a possible bull trap. If the breakout is driven by short covering, it won't last. If it is driven by new buying, look for longs to try to establish new support at the $2.70 level. Overcoming the $2.80 obstacle is essential to pave the way for reaching the $3 level, a long-term target that is currently within bullish traders' sight. Traders should closely monitor Middle East news and weather forecasts to manage positions effectively in this volatile market. Thank you for watching. Please like and comment to support the channel. See you in the next one.